Welcome back. Well, for the markets, it's definitely weak and sluggish at this point. So the mid-cap index is underperforming with a cut of around 1% We have the Bank Nifty, which is sulking as well, so lower by around 0.5% for the Bank Nifty. Sacchitanand Uttekar of Tradebulls joins in now on the show to discuss the technicals, how he would approach what is quite a weak market. Hi, welcome to the show, Sacchitanand. What is your view both on the indices as well as stocks?
Good afternoon, Ekta. Clearly, I think both the indices are under pressure. But if you look at some of the data points, both the indices are yet to register a close below their previous day swing lows. When it comes to Nifty, it is oscillating near multiple support areas. So if you look at the 200-day exponential moving average, which is placed at 16,520. We have the breakaway gap, which was established a couple of days back. It is placed at 16,480. So there is multiple support within this particular area, and we feel that until unless we don't see a closing below 16,430 from here on, we may not see markets undergoing a sizable correction. So probably it's a good healthy decline, which should be bought in. When it comes to Nifty, we are expecting this oscillation to continue on the higher side with a target of around 16,750. So long positions should be considered when it comes to Nifty. Unwinding is clearly seen in when it comes to Bank Nifty, but again it has still not registered a close below its previous day swing low, and its 5-day exponential moving average is also close to around 36,000 to 320. So even here, probably in case if we see a decline, I think that decline could be arrested somewhere close to 36,000. So net we are expecting this particular oscillation to continue within 36,400 on the lower side to 37,000 on the higher side for Bank Nifty. So I think Bank Nifty is something that can be avoided right now, but clearly the declines and the opportunity is good for Nifty for creating fresh long positions with a stop loss of 16,430.
Right. There are a couple of stocks that I'm looking at, and most of them in the large cap space is the Bajaj twins, Sacchitanand. We have BajajFinance as well as BajajFinance. BajajFinance, of course, looking for a bonus and a stock split as well. Delta Corp out of F&O ban and into big gains, 6% gains out there. And you have Hudson Agro as well. They've increased their capacity, or they've announced some capex. So these are stocks which have fundamental reasons backing them. Are technical reasons also giving them some sort of momentum? Is there a trade in any of these?
Well, if you look at BajajFinance, the stock has been on our radar. But if you look at the last 3 trading sessions, we've already seen a substantial move from the breakout zone of 6,100. So we are expecting that the immediate hurdle for this particular stock is somewhere close to 6,380, where its 200-day exponential moving average is placed. And probably once we see it breaking out, out of this particular cluster, I think 6,400 could be achieved immediately. But I think there are a lot of other pockets of strength which are emerging, especially if you look at some of the cement names, especially on the mid cap side. We are liking the structure of JK Cement. If you look at from a daily perspective, there's a clear-cut rounding bottom formation which has been activated here. If you look at the weekly structure after 4th of February 2022. We have seen this this stock scaling above its 20-week exponential moving average, and even the weekly RSI is eyeing for a breakout above 50. So probably when it comes to cement, I think JK Cement looks good from a reward perspective. We're expecting a move towards 2,600 eventually, where its 200-day exponential moving average is placed. So I think long positions can be added when it comes to JK Cement with a stop loss at 2380. A swing target could be placed at around 2530, but positionally we see it scaling towards 2600.
Sure.
On the shorts,
please go ahead.
Sorry. And on the short side, I think Indigo is something which has been on our radar. We have recommended this trading opportunity to our clients via options. The stock is struggling at around 1800. Multiple times we have seen an attempt towards 1800, where its 200-day exponential moving average is in place. And today we have seen fresh short positions getting piled up. So we are expecting this particular correction to continue towards 1700. And that's why we are recommending building fresh shorts when it comes to Indigo with a stop loss at around 1805.
Okay, fresh shorts on Indigo. That stock has been under pressure for a while, down about 2.5%. Thanks a lot for joining us, Sacchitanand. Have a great day. Let's flip